Are we headed into a recession, or are we already there? The numbers just don't lie, and under the current administrations, both in Canada and in the US, the warning signs are absolutely flashing red. Now, taking a look at the manufacturing index alone, we have seen the numbers absolutely crash. And we're not just talking about a little bit of missing the mark. We've actually seen back to back to back negative numbers from the manufacturing sector. Then you factor in the canceled orders, which are absolutely accelerating to frightening numbers. And it's anticipated that this parabolic rate is going to continue. Add job growth, which has been absolutely stagnant, and we are looking at some major negative numbers. Don't forget, you've got to factor in imports, which have absolutely fallen off a cliff. The problem is, it's not from a position of strength, but rather a position of weakness. Now, if we're taking a look at the imports, we also have to factor in the tariffs, which are absolutely still on the table. And although, yes, there are negotiations between China and the US, it is still not helping. And in fact, this is also going to accelerate the stagnation effect, which is going to see additional high prices plus low growth and rising job losses. Now, the Fed is in a very bad position here. They're stuck. They can either cut rates, which is going to be excessively inflationary, bringing down the US dollar, which Trump wants a lower rate of as much as a 1% cut at the next meeting, and a lower dollar, or they can raise rates and risk a potential economic collapse. There's no real easy way out here, but we know what the ultimate decision is: money printing, cutting rates, crashing the US dollar. But let's have a look at the market outlook overall. Defensive stocks might be a hold here, but tech and cyclicals really do face some very significant risk here. Now, although the AI momentum is definitely going to take hold, as well as if we take a look at military, definitely some areas where we're going to see some continued growth. But it really depends on where inflation lands overall. The idea here is, if you'd like to really take a look at what your portfolio should be and how to modify it, you really have to consider everything and the current market trends. After all, there's a very big dissociation between the economy and the market. They're not working side by side, at least for now, but eventually they will come in collision with each other, and that is where we need to keep an eye out, especially for the crisis in the debt market.